The bulls take hold of this market with weak volume, rising interest rates, and inflation fears. Is this start of a new trend or just a head fake? Stay tuned, we'll discuss this and much more. Hello, this is Michael Loftus for Wealth and Wisdom TV. As always, if you find this of value, please consider subscribing to our channel. Also below, show more for additional links and information on today's video. First up, question from a viewer. You showed a chart last week from the Fed. It really didn't look as bad as you said. Could you explain a little bit more? Absolutely. Here is that chart, the Fed balance sheet. As we know, it was very low until our last previous cash, and the Fed started dumping money into the system by buying treasuries. All right, when you look at it, you can see the rise up, okay, and that rise up would coincide with the S&P. But at the very end there, you can see a little button hook, but it doesn't look like much until you take this view. This going back just a few years, and it looks like it's falling off the face of the earth. So what exactly are they doing? Well, you had quantitative easing. I would call this quantitative tightening, and that's because at this point they're not reinvesting the cash from these bonds. The objective is start with $10 billion, raise $10 billion a month until they get to $50 billion a month over each quarter, and they will not be reinvesting 50-some billion dollars a month, which is huge. And you can see the true impact. Here's a chart from our highs where they stopped reinvesting. They came in, last week when the market bumped up. You can see the absolute impact of this. So as they continue to reduce their balance sheet, I've been saying this, it's a big concern of mine. Next up, the numbers. Across the board, finally, we're up again. NASDAQ, the big winners. Smalls, mids continue to lag. Let's get to the big charts. First up, last week, it looks great, doesn't it? 5 days of green. How could you be upset with that? Well, it's my job to go a little bit deeper. There's a couple problems here that I see. At the bottom is volume. Blue, I'll have Michelle highlight that. That is the average volume over 50 days. Some days we were 50% lower on volume. No conviction on this market as we drove higher. So that is a concern of mine. Next, I'm going to zoom in here to the top. This is a 30-minute chart. I overlaid the Fibonacci retracement. Yikes, what is that? Below, we have a link to that, but it's basically a mathematical calculation. You pick the top, you grab the bottom after a rebound, and you see where the retracements are. And right there was upside resistance, 27.42, and we hit it Friday and failed. So that is a concern of mine. Also, we're still right at 20. Going in even further here, year to date, what happened on Friday? This shows you that failure at 27.42. But I'm going to have Michelle zoom in on that candle. That's what's called a bearish shooting star. Okay, when you look at the charts, and when it closes, you go up and it closes down below it, that shows a top could be in. Now again, we use these as guide, not absolutes, but it can be a recent top. The other thing is when you look here, 15, 16, this is our trend that we're following because that's our last meaningful correction. We talked about a couple weeks ago, we hit the bottom side of that trend. Algorithms kicked in, boom. We went off the 200-day, off that trend line, and we went up last week. But now I'm going to add the upper trend line, and you can see it again, true upside resistance. So concerns there as well. So short term, neutral. A little concerned here. I still think we have an opportunity for another retest here on the downside. But if we get above that 27.42, different story, and I'll look to add. weekly chart. So our midterm, you look here, not a lot of change, although at the bottom, momentum, you see that crossover. That's not a good sign. So midterm, yes, we are still positive when you look at this chart. We bounced off our trend line. Overall looks okay. Monthly, as you would expect, positive, because you look at the long-term trend line and we're above the 50-week average. So again, still positive until we fall below that. Looking at market breadth, did improve last week on the 200-day. As you would expect, 71, 76% for the NASDAQ. Small and mids just above 60. Above 60 is a little more bullish, but not a lot of conviction there. But the short term still looks iffy, which is why I'm neutral. Yes, we're at 54% on the S&P, but below 40 bearish, above 60 bullish. Right now, we're in the middle there. NASDAQ is the only one above 60, and both small and mids are still under 40, so still have some concerns. Looking at the Dow, same look, same view, almost identical chart. At the top there, double bottom on relative strength, bouncing off 30, somewhat positive. Let's see if we can get some strength above 50. And NASDAQ is the only good-looking chart this week where we see we've broken out and we've gotten above that 61% on the retracement numbers. So still at the bottom, we're looking at a little bit of a bottoming process there in momentum. We'll see if we get a better picture this week. Sectors. As you would expect, improving across the board. The ugly ones continue to be utilities and REITs, both interest rate sensitive, not a good sector to be in right now. And retail, we're going to talk about that in a second, continues to look ugly. On my radar, patience. All we need is just a little patience. Not doing anything right now, trying to see where this market shakes out before we deploy any money. Sold some dogs, took some losses, raised some cash, and looking for that next opportunity, whether to the upside or the downside. Treasuries, which has been the big story all year, continue to rise. 2.8789 last week, closed out in that range on the 10-year, but our spreads, 10-year minus 2-year, got tighter, down to 0.66, and you can see the cause, which is the 2-year really continuing to rise. That continues to be a concern with rising interest rate. So, what keeps me up at night? Yes, that is in fact me, but lower last week. A lot of data last week. The New York ISM number basically came in negative. Retail sales are terrible looking. Where is the consumer? They're not spending, they're not saving, they're way too much in debt. Industrial production, lower. How about up, higher? Yes. CPI and PPI, two things we don't want to see. A lot of inflation fears. 2 weeks ago, we heard that the market goes down. This week, it brushes it off. Let's see if they can continue to rise and also brush it off. As I've said, the natural end to a bull market is rising interest rates, check, and inflation, check. So, have to be concerned about that. And wrapping things up here, what else keeps me up? Cape, we're still very expensive. You can see the chart here. This shows if we go back to fair value, the Cape is at 33. PE, very expensive. 16's the medium. PE right now went up on the regular PE to about 17 and change. And this chart shows you if we got back to just 20 on the Cape, we'd be at 21.42, which is about a 20% loss. Wrapping things up, fear and greed, calculations below. Up a little bit, still a lot of fear out there, up to 18. Again, signals, short-term, neutral, might change this week. Midterm and long-term are continuing to stay positive. As always, we appreciate you watching. This is Michael Loftus for Wealth and Wisdom TV.